Hello viewers and welcome to my YouTube channel. Today, I'll be bringing to you the topic, different business sectors that benefit from inflation. Not all businesses suffer during rising inflation. There are exceptional business sectors which I'll be bringing to you that benefit from inflation, while there are some that you should not venture into during inflation. So what then is inflation? Inflation is the rate of increase in prices within a given period of time. Inflation is typically a broad measure such as the overall increase in prices or the increase in the cost of living within a country. Inflation occurs when there's overall increase in prices, hence increasing the purchasing power of money. Which then are the sectors that benefit from inflation? Although most equity sectors generally suffer during inflation, there have been exceptional cases that resisted and have beaten the rising inflation. These sectors that benefit from inflation includes 1. We have wine. When inflation rises and purchasing power decreases, many investors turn to real assets for an inflation hedge. Wine remains one of the best performers amongst the many physical items available for investment. Fine wine has outperformed the global equity index by 1.88% a year for the past 15 years. Wine has also beaten stocks, precious metals, and art for over 100 years. Wine has a minimal correlation of just 0.13 with equities and only about a third of the volatility most equity sectors face. Further, luxury makers with pricing power like wineries are better positioned during inflationary periods as they can maintain their profit margin by charging higher prices as input costs rise. Now, we'll be asking these questions. Why should you invest in wine? The very first reason why you should invest in wine includes scarcity. The world's best investment wines are produced in minimal quantities, accounting for 0.1% of the world's total wine production. So the demand for these bottles will always beat supply and prices will continue to increase. The second reason includes brand equity. Bottles from many of the world's best wineries can sell for huge amounts because they are in high demand by both investors and connoisseurs. The third reason why you should invest in wine is it improves with tone. Where most real assets will degrade in equity and value with time, wine improves. The closer the wine is to its maturity, the greater its value. The second type of business sector to invest in that benefits from inflation is real estate. The real estate sector is popular among investors because it improves in value amid high inflation while delivering increased rental income. However, real estate is vulnerable to rising interest rates as compared to past financial crises showed with the rising price of homes. It's important to note that when inflation is too high, banks will typically raise the interest rate to slow economic growth and curb inflation. There are several ways to invest in real estate. You can buy properties directly, which involves a much higher cost, or invest in a real estate investment trust. Real estate investment trusts are companies that own and manage income-producing real estate. Publicly traded real estate investment trusts are available on stock markets. Equity real estate investment trusts have an excellent history of withstand inflationary pressure. Since equity real estate investment trusts own real estate assets, there are a decent inflation hedge as they benefit from rent increases and property price increases. Real estate investment trusts are attractive because, by law, they have to pay out at least 90% of their net earnings to shareholders and should undoubtedly be considered for a fixed income portfolio. But bear in mind that the most real estate investment trust earnings are taxed as ordinary income up to the maximum rate of 37%. The third type of business sector to invest in that benefits from inflation is energy. The energy sector includes oil and gas exploitation and production companies, fuel producers, and businesses that provide energy producers with equipment, materials, and services. The energy sector has traditionally been a good bet during higher inflation, primarily because demand for gas and electricity remains the same regardless of the price. Energy stocks also tend to perform well during periods of rising interest rates. Although it's important to note that big oil companies have high operating leverage, which helps them deliver a high profit margin. Further, geopolitical and logistical tension can affect the energy supply, driving up prices. This has contributed to the energy sector being one of the best performers during periods of higher inflation. The fourth type of business sector to invest in during inflation are bonds. Investing in bonds during high inflationary periods sounds counterintuitive since inflation usually hits bonds the highest. However, inflation-indexed bonds work differently. Treasury inflation-protected securities are a popular option. Treasury inflation-protected securities are fixed-income investments that rise in tandem with the consumer price index. As inflation increases, so does the base value, and a higher base results in a higher interest rate. There are a couple of ways to buy inflation-indexed bonds. You can invest directly in Treasury inflation-protected securities through the U.S. Treasury or a brokerage account. Some mutual funds and exchange-traded funds also hold TIPS. There are junk bonds or high-yield debt for investors with a riskier appetite. Junk bonds tend to perform well when the inflation rate rises as demand increases for the riskier fixed income investment. The fifth sector that usually benefits from inflation are financial companies. These financial companies include banks, insurance, and investment companies. So these financial companies have been greatly affected in the past. However, after an influx of regulations and safeguards, the financial sector is considerably more robust today. The sixth type of business sector to invest in during inflation are commodities. Investors tend to favor real assets during a high inflationary environment since these are likely to benefit from the rising price. Gold has often been the first choice, but the precious metals asset class in general can benefit from an increased inflation rate.
You can invest indirectly in a mutual fund that holds gold. It's also possible to invest in gold miners. You can also buy gold directly from bullion or coin dealer at a higher cost. Commodities also include agricultural products, oil and gas, copper, soybeans. Investing directly into producers' shares or trading commodity future contracts are two promising avenues for accessing this investment.
The seventh type of business sector that benefits from inflation is healthcare. When there's uncertainty in the market, the healthcare sector provides inflation protection. The healthcare sector is also growing significantly faster than the global economy. However, the healthcare sector is broad and incorporates biotechnical companies, medical device companies, insurers, healthcare providers, which could offer decent inflation protection.
Eighth type of business sector to invest in during inflation includes consumer staples. Consumer staples are food, personal hygiene products, household items you buy even if they are charging higher prices. Typically, consumer staples companies don't offer the best earning growth as they are often large, mature businesses. However, they provide limited price volatility, reliable dividends, and a good hedge in an inflationary environment. Although these sectors have historically performed well during rising inflation, keep a lookout for others. Traditionally, value stocks in general perform better during high inflation. On the other hand, growth stocks tend to benefit from low inflation. We have to look into the three different sectors to avoid during inflation. Not every equity sector performs equally well during inflationary periods. There are three industries that have historically underperformed while inflation rises. You have the first type, which is consumer discretionary. This sector covers non-essential goods and services for which demand depends on consumer financial status. The sector includes companies selling high-priced vehicles and luxury goods. A reduction in purchasing power diminishes non-essential consumer spending. The sector is particularly susceptible to supply constraints, with the automobile industry being one of the hardest hit. Consumer discretionary companies also face fluctuating input costs, primarily from rising shipping costs, wholesale prices, and wages. While the economy is performing well, these companies can offload these price increases to their customers. You have the second type of business to avoid during inflation, which are industrials. Historically, the industrial sector has underperformed during high inflation. Industrial companies tend to face headwinds from rising input costs and diminishing demand. This is mainly because many industrial products like construction equipment and industrial machinery are cyclical. Supply constraints, high labor costs, and rising fuel prices can further contribute to the sector's underperformance, particularly for industries like airline and transportation. You have the third sector to avoid, which are materials. As global demand remains strong, the material sector can receive an initial boost during high inflationary periods. However, rising concerns about economic growth can weaken the material sector.
It's essential to allocate a portion of your portfolio to sectors that are historically resistant to inflation. This way, when there is inevitable rise in price, your cash flow remains relatively stable. So, fine wine should be top of mind for investors preferring tangible asset class when purchasing power suffers. If you did enjoy this video, please don't forget to like, share, and subscribe for more interesting videos. Thank you for watching.